This is a story of one of the, if not the cheapest, large automotive original equipment manufacturers. We're talking about Mahindra and Mahindra today. It's an interesting play of both India's rural story through its farm equipment sector, its tractors, as well as India's love for the sport utility vehicle through its urban play and the premiumization strategy that is at play in the automotive space. The question is, can it capitalize on the potential that it has, and will that reflect in the price? Indeed, in the end of last week, you saw the price run up very substantially, and despite that, we're talking about a very significant gap in valuations between Mahindra and Mahindra and its peers. So we're talking about the case right now, and I think the question that Tushar was asking is this Mahindra and Mahindra's moment in the sun, or is this going to be a case of sunburn? So let's lay the context first on the fundamentals, Samina, and then we'll go to valuations, if you'll allow me. How does it look right now? Because farm equipment is looking a little weak.
Yeah. So farm equipment, thank you, Alex. Good morning, Samina.
Good morning.
So the most important fact to look at M&M's farm business is that it's a cyclical business.
Sure.
Couple of years ago, tractor units were growing at 27% or something like that. It's down almost flat, and the company may end FY24 with tractor volumes at declining by about 5%. But the story here is not just about tractors. It's about the SUVs. That's because we have seen a run-up in the way SUVs are in demand in India.
Yeah.
So M&M, as per its Q3 earnings, it says it's the #1 company as far as revenue market share is concerned, not in absolute numbers. So it's not selling as many units.
That number is Maruti's.
That number is Maruti's. So what they're doing is they're getting the money, but they're not selling the units. They're also down on average selling price as compared to its peers, but it will still be the fastest growing because that's what the guidance that the company has given.
Right.
It will grow in the mid to high teens with the industry average seen at about 10 to 12%.
How are the margins on this business, Tushar?
So,
because while I know you'll get the numbers, what happens to margins?
So in margins, what happens is they want the premiumization to be in play. So essentially, they want the buyers to be spending on the Scorpios and the XUV 700s. But what the company has faced problems is that people have gone to the top end of the SUVs.
Yeah.
So while there may be numbers coming in a way, but that's not still reflecting in the margins.
It's actually an interesting conversation, because if you look at the last decade and a half, Samina, and anytime you've seen an instance where rural has underperformed, you've seen farm equipment sector do a little badly. Urban has taken the pie for...
and it's happening right now, Alex.
Absolutely.
Maybe not in the auto pack only, but everywhere else. So we'll talk about that tomorrow.
Yeah.
But be it FMCG, be it other sectors, like he said this morning, if rural doesn't do too well, urban jumps in to give the support.
That has worked for us, for our economy so far at least. So that helps for us. But this is what I said, when is the case of a sunburn or not, because it's an opportunity for M&M to squander. If you see your SUV is in so much demand, what M&M needs to do now is to actually get those products out. It's to get its product mix right.
So when are these product launches expected, Tushar, over the next couple of quarters?
Yeah, so by first quarter of next fiscal, that FY25, they want the 5-door Thar. Remember, the Thar is the product that brought back M&M 2 or 3 years ago. The company also has about 5 or 6 EVs in the pipeline. There is a refresh of this XUV 300 that is going to come in. So those products, the new product launches as we have seen, draws the volumes as well. So while the company wants to shore up its margins, it also is looking at building its absolute numbers as well. It wants to sell more. It wants to gain market share. So while, we have the revenue market share, but we want the absolute market share, absolute market leadership as well.
So, but let's talk about valuations.
Yeah,
and that's the picture.
And I think it's interesting, right, Tushar and Alex, when you compare, so first let's look at Mahindra and Mahindra's recent rally. It's done an 8 to 9% up move in the last 2 days, post-earnings, and post the fact that they announced that deal with Volkswagen. So both those factors led the counter to lead the way up in the auto pack on Friday. Now, when you look at those numbers, it trades at close to 20 times its forward price to earnings. That on the face of it, when compared to its peers, appears extremely cheap. But what you want to keep in mind, it appears expensive to its own historical average. So historically, M&M has traded at 14 times forward earnings. Now you're at 20 times forward earnings. So there's a huge gap in terms of a premium that it's currently trading at. So while I said it trades expensive compared to itself, but cheap as compared to its peers, now on the face of it, it looks cheap, right? Let's break this down. The reason it trades at a discount to its peers is because M&M, the whole company, only contributes to 30 to 40% of auto.
Yeah.
There is some holding company, there is the NBFC arm, so there are a whole bunch of businesses that go into M&M, and the valuation hence doesn't look too fair. It looks, and the calculation is done on the SOTP basis. So I think the better way to look at this is, while it looks cheap, it's actually not cheap. It's not cheap as compared to itself, and I think that's what investors want to keep in mind. Also, what brokerages, and I want to come on this one because you know, when you and me spoke yesterday, we said, oh, brokerages seem so euphoric about M&M. But Tushar and Alex, you both will agree, while everyone has come out with a brokerage note pretty much immediately after the earnings came out on M&M, from your Nuvama to your Bernstein to CLSA, the whole list, everyone has increased the target price, but there hasn't been an aggressive upgrade on the counter. The max increase in target price stands at 18 to 20%, which after Friday's rally would be much lesser.
Much lesser now.
So there's no aggressive upgrade. Let's not forget that. While we got very excited and trying to explain the move on Thursday, Friday to earnings and brokerages, they've only hiked their target price, and not so aggressively either. But yeah, you got to tell us what you made of those brokerage reports.
So, in a way, we saw the upside as about maximum that we saw was from, I think, Motilal also at 21%.
That's it, yeah.
That's it. And since you mentioned about the SOTP angle, that's the most important thing to see, that it's just not the auto business as far as Mahindra's valuation is concerned. They have to consider everything else as well. So essentially, what they have to now do is actually see how do they manage their order book, how do they manage their waiting periods. So if you
so therefore the question is, where do the risks lie at this point, and is it in the price? So first, where do the risks lie, and then is it in the price?
The good news is in the price. That I can
yeah,
promise.
So that's the
where
answer.
the risks lie is not delivering on the promise.
Okay.
So essentially, if you have a production capacity of 49,000 units, if you're sitting on an order book of about 2.25 lakh, that's the order book that the company is sitting on, and the waiting period, say for example, for a Thar or a Scorpio is still 1 year.
Sure.
So if you're not able to bring that substantially, so you will see highest cancellations coming forward.
Sure.
Secondly, M&M, and actually it's a very weird thing to bring up, especially when it's deal with Volkswagen, has actually underway now. So it will bring up more EV components from Volkswagen for its EVs that are going to come in. So historically, M&M has, if for a better word, has bungled its alliances.
Yes.
M&M has had an alliance with Ford, M&M had an alliance with SsangYong for
Renault.
getting into, as well as with Kinetic for its two-wheeler business. So the history does not look good for M&M. So any delay or any gaps in this particular alliance will not bode well for M&M's EV business. Remember, 6 EVs that M&M has promised that will launch 6 electric SUVs in the next 18 months. Any delay and you'll have a Maruti coming in with its product in October. Tata will not give up on its advantage.
Which is a market leader right now.
So those risks remain.
And by the way, that list is much longer. You have Navistar, you have Renault, as we pointed out, you have the two-wheeler play that you mentioned, and there are several more. But what was the point that you were saying?
My very quick apprehension here is, while the big bet is PV, is EV, if we don't see a sharp rebound, there's no upside risk in tractor sales over the next couple of quarters. Will PV be able to support the kind of valuations M&M trades at this stage?
That's the sense that we're getting from brokerages.
Okay.
So Bernstein says that the valuations, current valuations, it is the SUV story that they say.
Yeah.
So it is now meaty enough to carry.
So historical past performance cannot be an indicator of future performance
so
in the case of EV.
The Indian car market itself is changing.
Yeah.
So you have the SUV volumes
it's across businesses.
So it is, again, SUV is the driver, as what even brokerages are saying. Tractors may take a step back for some time because it's a cyclical business. If it performs very well, if it lays flat, then, I mean, okay, at least the SUV will still carry on.
So, you know, we talked about Tata Motors a few weeks ago, and we talked about Maruti, and this morning we talked about M&M. The story for all three, clearly in terms of future outlook, is EV. But if, and of course, this is not a recommendation, so I'm very clear that we're not recommending any stocks to anybody. But in terms of what we've seen, what commentary we have and prices stand, between the three of them, who seems better placed at this stage?
Okay, that's a
tricky question.
It's a tricky question.
And completely different entities, right? Because
Yeah.
I would argue that you have Mahindra and Mahindra,
Which is a group entity. I mean,
and which
group
has farm
company, yeah.
equipment and
And-
automotive.
Yeah.
Tata Motors is a Jaguar Land Rover play because 70% of their revenues come from Jaguar Land Rover. Maruti Suzuki, India's largest passenger car
vehicle.
maker, and seeing a transition from entry level to SUVs. It is the largest by volumes right now, and you could see a situation where down the road it could boost its SUV offerings to have the very large offerings as well.
So no decision on this
You
one.
can't. I don't think that you can
I guess
necessarily
it depends on what your preference is. If you
Yeah.
want PV and EV,
Yeah.
you pick Maruti. You want luxury and EV, you pick Tata Motors.
Yeah.
You want farm and EV, you pick
SUVs, farm and SUVs.
Farm and SUVs, you pick M&M.
But hopefully we'll given our viewers some perspective on Mahindra and Mahindra. The fact that, yes, when you look at its peers, the multiples might look very attractive, but as Samina pointed out, it is trading at multiples that is higher than its historical averages. So bear that in mind as well. Lots to talk about before the start of trade. We'll talk about several individual counters as well as the latest from the F&O space, and you'll find all of that